Welcome back to 𝐿 everyone. So I'm going to go with you guys in the S&P 500 again. This is the SPY having a major gap down after respecting our 20-day moving average to the downside, as we did mention yesterday. Again, testing to possibly reject the lower end of our 20-day moving average after we already bounced off of our support here, retesting it, and sure enough, did continue on lower on a gap down. Now very much looking to see if we can either bounce back from testing the lower end of our second deviation here. Are we going to continue to break back into it and possibly have that squeeze to the downside? Again, if we break into our second deviation here and continue on with momentum candles to the downside, then we could continue on with the squeeze to the downside, possibly test lows of the year. Or are we going to have a bounce back leading into Fed rate hikes next Wednesday? I'm going to go over exactly what we're looking for here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button, hit subscribe if you want to see more chart updates on potential breakouts or market updates that I mention every single day throughout the week. And if you guys are day traders or you are looking for very volatile breakouts that we mention every single day in the Instables room, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, again, mentioning yesterday that we were pointing down. Again, we did mention that there was room to run to the downside if, again, we did want to continue on lower since we are not oversold quite yet. Again, if we do jump into oversold territory, we will be looking for those bullish divergences and getting higher lows as we are oversold, and we will be looking for lower highs on our price action. And looking at our overall strength, as you guys can see, we do have our EMA lines pointing down. We did mention that we got this rejection. Again, when CPI came out on Wednesday, expecting a decrease in CPI, we could have possibly continued on higher from here. More likely than not, we would have, and then continued on with that strength. However, as you guys can see, we got that rejection. Very much looking to see if we can start to curl up here again. That will be a signal on when we are losing possible strength to the downside, and then looking for those divergences and getting higher lows, and then possibly crossing above here at some point, so that way we can break above the median of our MACD, so that way we could continue on higher again next Wednesday's Fed rate hikes will very much predicate exactly where these EMA lines will head next week, in my opinion. Now, looking at our candle structure here, again, sitting on a gap down, our question is, are we going to bounce back or are we going to continue on lower from here? In my opinion, again, closing with a green doji candle, very much on watch to see if we can open higher going into Monday. But again, even if we do open higher, that could be that possible test, even for a possible fake break above our prior support here, with, again, that inverted hammer that could possibly come out. And then a possible momentum candle to the downside. If, again, we do get a bad Fed rate hike, if we get a 100-point base rate hike, then we could get that momentum to the downside and possibly get that engulfing candle to the downside from here. That would be a setup, possibly, again, retesting our support if we do bounce back. Now, jumping back to the upside, again, just looking for our EMA lines to cross back up. Again, getting those decreases in sell pressure, so that way we can get that decrease in momentum to the downside and possibly have that bounce back. And at that point in time, so again, looking to see if we can either bounce back and possibly look for that confirmation to the downside, or possibly look to see if we can get back above our support for a better setup to continue on higher here is what I'll be looking for. I do want to see if we can at least break over 400 if we are looking to the upside again, and if we are looking to the downside again, just looking to see if we can continue on lower, possibly look at a better setup to the downside since we already gapped down if we are playing late. But if I am holding again, just making sure we stay green. We hit a gap down. Again, selling the rip is exactly what I focus on doing. It's something that most traders, in my opinion, should be thinking about, is just selling the rip, especially on option plays. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables room, go to instables.com in the description below, and you will never miss a breakout alert today again. And again, all of you Instables that come over every single day and support the channel, I appreciate every one of you guys. You guys have been coming over every single day and supporting the channel. I appreciate everybody that really has been coming over and supporting the channel. Truly, I appreciate you guys. Most people have been messaging me saying, you know, like, what a blessing you have been. And to be honest, I'm just glad that I can be that for you guys. I look forward to it every day. Love you guys. We will continue to go at it. Stay patient again on these gap downs. Again, just making sure we are staying patient. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.